Today, I have the pleasure to chat with Adrian Day. He's one of the sharpest minds in the business. We're going to be talking about gold and silver stocks today, and he's a wealth of knowledge. He's been managing money in the sector for decades. He's one of the smartest people out there, so I highly recommend that you listen carefully to what he has to say. Thanks for joining me today, Adrian.
Well, thank you very much for asking me.
Today, I want to talk to you about precious metals. Where are you finding the best value in the precious metal sector today?
Well, of course, that begs the question that I am finding value.
Sure.
Yes, your assumption is correct. I am finding value. I'll answer the question about value, but I'll change the question a little bit, if I may, and say, where do I think the best place to be buying right now is? And, at the beginning of a bull market, the senior stocks, the large miners, the large royalty companies, they will always move first. They will always move before the juniors, the intermediates, the juniors, the explorers, unless those smaller companies have something company specific. And so at this point in the cycle, frankly, when the large cap stocks, despite the move that we've had in the last 6 weeks, the large cap stocks are still very undervalued. They're very under-owned. I think that's the place where people should be putting most of their money for the time being. And not only are those the first to move, but another important consideration is the larger companies are also the more certain to move. And by that, I mean, if you bought, I'll just say, I'm not saying I like these, but just if you bought Newmont, Barrick, Agnico, Franco, and Wheaton, I can pretty much guarantee you, as much as the SEC allows me to guarantee anything, I can pretty much guarantee you that if gold goes to 2,500, those 5 stocks are all going to go up. Whereas if you buy Consolidated Moose Pasture and Amalgamated Ajax and so on, they may or may not go up. So the big cap stocks are the first to move and the more certain to move. So I would focus at this point more of the money in the large cap stocks. Now, and that's both the miners and the royalty companies. But you know what? There's some astonishing values among the juniors and the exploration companies. I just think you have to be a lot more selective. The smaller the company, the lower down the food chain you go, the more selective you have to be. And one of the things that I would be really focused on at this point with the smaller companies, apart from all the normal stuff, but one of the things I would really focus on is the balance sheet. And it's not just how much money they have, but what's the runway? How much time do they have with their current balance, current cash, before they would need to go out and raise more money? So they either have to have a strong balance sheet, lots of cash, or they have to have no debt, or they have to have cash flow, and some juniors do have cash flow, or they at least have to have ready access to capital. Some companies can always raise money. I mean, in a bad market, they have to pay a little more, but they can always raise money. But there are other companies that if the market tightens, they simply won't be able to raise money at all. So you need to make sure that the company has a runway and that they're good for, I would say, at least 18 months, at least.
Okay, excellent. You mentioned starting with the biggest companies. So I remember you being pretty bullish on Franco Nevada after the whole Cobre Panama fiasco a few months back. I was looking at the gold price when that happened and when the share price when that happened. And back in late October, this was before the mine totally got shut down, but there was bad news coming out. And this was before it started crashing, right? And then the gold price was $2,007 and the share price was $138. Today, the gold price is over $2,300 and the share price is $119. So the gold price is up about 15%. And at the same time, the share price is down 17% from there. So do you still think that's a good value?
Sure. No, absolutely. I mean, the thing you've got to remember is that Cobre Panama represented 19%, almost 20% of their revenue, and 15%, 16% of their NAV. So when 16% of your NAV just gets taken away from you, it does 2 things. First of all, and remember, Franco's trading at 3 times NAV. So arguably, if you lose 15% of your NAV, if you lose, the stock should be down 3 times what your NAV is because the stock's trading at 3 times NAV. But when you lose your largest asset, you lose not only the revenue, but you also lose a certain amount of credibility. Because up until that point, I think it's fair to say that Franco was a company that even since, going back into the 80s, before they merged and then unmerged with Newmont, they had a reputation for sort of never putting a foot wrong. You could argue this wasn't their fault, but nonetheless, people say, well, where was your due diligence? How come you put so much of your money into this mine, et cetera, et cetera. So there's a little bit of credibility, particularly with generalists that are lost. But no, I mean, I think when you look at Franco right now, you've got a company, certainly great management, but you've got a company with a rock solid balance sheet, 1.4 billion in cash, no debt. They've also got access to a line of credit. So they have a total of 2.5 billion, 2.4 billion in available credit, but 1.4 billion in cash. They've got revenue from over 100 different assets, including the oil and gas assets, and no single mine at the moment. Now they've written Cobre Panama off. They've written it off completely, as you know. No single asset represents more than 15% of their NEV, but most of them, there's 3 of them that are over 10%, and then you go down under 10%. So in fact, it's very well diversified. But truth is, Franco, even when Cobre Panama was up and running, Franco was more diversified from both Wheaton and Royal. It's just that they had the bad luck of having their mine shut down. And the thing to remember with the royalties, of course, is that they're not the operators. So they are really limited as to what they can do. When Panama was negotiating with First Quantum, they were really limited in what they could do, how they could influence those negotiations, other than, putting pressure on First Quantum to do this or to do that. So yeah, so I think it's an extremely strong company. And the other thing I'll end on, which is critical, they've written Cobre Panama off completely. They are assuming zero income from Cobre Panama this year, which, remember, was their largest asset. But even without Cobre Panama, their GEOs, gold equivalent ounces, their production, if you like, is actually going to go up this year, even without Cobre Panama. And so I'm not trying to dismiss or diminish how important Cobre Panama was and still is. But the truth is the company is growing, continues to grow, even without Cobre Panama, which is pretty astonishing when you think.
Yeah, for sure. And you mentioned them trading at a significant premium to NAV. I know they are relative to what the analysts say the NAV is, but I would argue that the NAV, or that the analysts, are calculating the NAV wrong, because the analysts, number one, they don't take into account an increasing commodity price over the years, and over the years, the commodity price tends to go up. And number two, they don't take into account the expansions that aren't planned at these mines. And when you have these super long life mines, like Franco Nevada has, and their low cost mines, well, those tend to expand over time. So do you think that maybe it's not so much that they trade at such a high premium, but rather that the analysts calculate the NAV wrong?
No, I think you make a good point. And I think the analysts calculate NAV wrong for all of the mining companies because, they have, if you use a MPV 8 or something, you're basically putting zero value on anything that's more than 12 years out. And that's just not reality for the mining business. But I think it's particularly important, as you say, it's particularly important with Franco because Franco tends, most of their big streams, other than the gold strike royalty that they have, Barrick's gold strike, their very first gold royalty that they bought back in 1983, 1984. But other than that one, all of their big assets are streams, and most of them are gold byproduct streams on copper mines. And the copper mines are 40, 50, 60, 70, 80 years long. So one can debate and argue how much should I pay today for revenue 80 years old, 80 years into the future. But I would argue it should be a little bit more than zero. And certainly if you're talking 30 years, it should be more than zero. And yet the analyst net asset values put zero on that kind of revenue.
Sure, right. You said 12 years out, you're getting zero value. I mean, today it's 2024. Let's rewind 12 years and pretend we're in 2012. 12 years out is today. Are we supposed to say that in 2012 they were supposed to assign zero value, zero, to the revenue we're getting today this year?
I think if you look at it, it diminishes very, very rapidly after 10 years on an NPV8. And yeah, you're right. I mean, it's worth something. I mean, the question is a mine that's only going to last 10 years, everything else being equal, production being equal, is a mine that's going to last 10 years worth less than a mine that's going to last 30 years? Of course it is. Of course it is. And the NPV model simply doesn't take that into account. Sure. So I think you're right, Franco, and this is true of Wheaton as well. Wheaton's mines tend to be very, very long life as well, although the duration on Franco is longer than Wheaton, longer than Royal, the other two big royalty companies. So I'm not afraid of the valuations at which these things trade. I think there's a reason that they trade at high valuations, or supposed high valuations, including, frankly, cash flow, because they have the upside without additional costs, whereas a mining company has the upside, but they also have the costs. And as we all know, sometimes when the price of gold moves up, so does the price of all of your costs, and your margins actually get squeezed with a higher gold price. Whereas the royalty companies, without having to pay the costs, they get the full benefit, or at their streams, not necessarily the full benefit, because the stream costs can adjust, but they get certainly most of the benefit of the upside. So yeah, they deserve to trade. They should trade at higher cash flow multiples.
I think it'd be really good for Franco shareholders if Barrick Gold got their hands on Cobre Panama, because I don't think there's anyone better on earth to get that back into production than Mark Bristow. Have you heard anything more through the grapevine, through your contacts, if Barrick might end up?
Bristow, well, first of all, Bristow, as you know, doesn't like to overpay. He doesn't like to overpay. I think Barrick would be the perfect company to take over all of First Quantum, frankly, because most of First Quantum is in Panama and in Africa, and Bristow, you know, he is African, South African. He's African, and he's got a very long record of successful operation in Africa. So, you know, I think Barrick's the obvious candidate. The problem is he doesn't like to overpay. I think you have to pay a premium. If you want to buy a big company, you've just got to pay a premium. And the other thing, frankly, is he doesn't like to overpay. But as he says, we don't need to overpay because we've got such a lot on our plates anyway. And if you look at the Rikadik in Pakistan, you could hardly find a more risky jurisdiction, of course. But if you look at that, you know, that's going to keep the company going for another, 40 years or something. So they don't need to make a big acquisition, but they would be perfect. The problem with the stream, as you know, royalties are normally on the ground. So it doesn't matter who's operating it. It doesn't matter if there's a change of government, unless, the communists take over. You've still got your royalty. It's on the ground. A stream is with the company. And typically, when a company does a stream with, let's say, with Barrick, let's say Royal did one on Pascua-Lama, well, you have a backstop of collecting some, not necessarily all, but some of the gold you were expecting from Pascua-Lama. You have a backstop from all of Barrick's operations, right? And so even if the mine, in the case of Pascua-Lama, doesn't come into production, you're still getting some kind of revenue from other mines that the company owns. In the case of First Quantum, first of all, wouldn't do it, and they couldn't really do it because they have no other gold anywhere. Their mines in Zambia are pure copper mines, so there was no way for Franco to get a backstop. So there is no backstop. So the problem is, First Quantum were to sell their assets on a friendly or unfriendly, but were to sell the assets to another company, they would have to include Franco's stream with the sale, or Franco's just going to sue them. The worst happens, and Panama were to confiscate the mine and sell it to someone else or do an auction, then that stream would not follow. So that's the big risk there. I don't think that's going to happen. I mean, Panama's actions here were not good, which is an English understatement. But I mean, Panama is not like North Korea. They're not going to confiscate the mine, I don't think, without compensation. So the question is open. Is First Quantum going to get it back up and running, or is First Quantum going to sell it to someone else who then comes in and probably has an easier chance negotiating with the government and gets it back up and running? But First Quantum would have to sell Franco's stream with it.
Sure. And even if none of that happens, well, then there's a pretty good chance that Franco recovers something in court, but that might take a while.
Sure. Yeah. Worst case. Yeah. No, all the lawyers I've talked to say, based on what we know, they would definitely win in an international arbitration. The question is, A, it takes a long time, as you said, and B, once you get an arbitration award, you then got to recover the assets, which the Panamanian government is probably unlikely to just hand over. So you have to capture a Panamanian aircraft when it lands in Colombia, and you've got to capture a Panamanian ship when it's sailing through the Caribbean, that kind of stuff. Takes time.
Besides the majors, are there any other specific companies that you really like today?
Yeah. Well, I like to look at companies. Well, I like to look at a lot of different ways. But one of the things I do look at is great companies with great management that have what I think is a temporary decline in the price. So you look at a company like B2, for example. B2 is a great company. They're great operators. They've got a solid balance sheet, 150 million or something. They pay a dividend. That's around 6% right now. So it's one of the highest, if not the highest, in the gold mining business. They are very, very good mine builders and mine operators. They have a very, very strong record at building and operating mines, and also in community relations, because they've worked in some pretty difficult places over the years. So the stock is down at the moment for two reasons. One is because they bought Sabina Mining, which I'd probably called Goose Bay up in the Yukon, which near the Arctic Circle. So B2 is building that mine. And any time a company is building a major mine, the stock price is always weak. We saw that with Equinox building Greenstone, which is in Ontario, not in the Arctic Circle. But it always hurts the stock price when you're in the process of building a mine, because when you're building a mine, things can only go wrong. You very rarely have pleasant surprises when you're building a mine. Maybe you finish on time, on budget, but that's what people expect. So it's not a surprise. I mean, it is a surprise, but you know what I mean.
Sure.
So anyway, it's down because they're building a new mine, and they're building a mine in, let's face it, a difficult area. The Arctic Circle the cold can affect equipment. Equipment can freeze and break and so on. And then, of course, more recently, they've had the issues in Mali. Mali is where their largest mine is. The Fekola represents about 27% of their NAV, so it's significant to the company. And, Mali, the military took over. There's no elections. And I think they're viewing the mining business as a cash cow. So they had an audit of all the mining companies. They're looking at revamping the mining code. And then just recently, there's been a report in the Canadian Global Mail that they're looking at nationalizing Barrick's big gold mine there. And that's really hurt all of the companies operating in Mali. But I think whatever happens, the company will come out of that. I mean, even if worst case, they lose Fekola. They've got other things in the hopper that they can accelerate. So I like that one. I won't be so long on the others. I like some of the junior explorers, again, that either have strong balance sheets. Midland would be one. It has a very strong balance sheet, about $8 million. It has, don't quote me on the numbers, but it has active joint ventures with about 8 different companies, including Rio and BHP. So, good solid companies, and then down from there, Soquem and so on. So they have a lot. It's a prospect generator. So they have a lot of active projects with senior companies. They have a strong balance sheet, and they're in Quebec, great jurisdiction. So I like that model. Another one I like is a company called Orogen. Orogen is a royalty generator. They've changed the name to a royalty generator. They'll go out and generate projects, so the same as a prospect generator, but instead of having someone earn in over time and keeping 50% and keeping 30%, they will sell 100% of a project in return for a decent royalty. And right now, they've got $18.5 million in cash, a super strong balance sheet, and they've got positive cash flow from a royalty that they have, Ermitaño, which is First Majestic. First Majestic has the Santa Elena mine in Mexico, and then most of the ore going through that mill now is coming from the adjacent deposit, which is called Ermitaño, which Orogen owns a royalty on. So they've got a strong balance sheet. They're getting positive cash flow. But in addition to that, they own a 1% royalty on Anglo Gold's new discovery down in southern Nevada at the bottom of the Beatty trend. Well, sorry, bottom of the Walker Lane trend. The town's called Beatty, and they own a 1% on two of the deposits in that sort of district, Silicon and Merlin, which right now contain over $13 million ounces of gold. So that won't come on stream probably until 28 and probably even after that. But Ermitaño is going to last until then. So the company's going to have, God willing, and the mule don't die, they're going to have cash flow, all the way through to when Silicon and Merlin come on. And the truth is they will probably get an offer from one of the senior mining companies in the meantime that they can't resist.
Regarding B2 Gold, based on my analysis, basically, you buy all of the assets in the company at a fair value, and you get the Mali assets for free. You get Fekola for free. So yeah, there's major problems there, but I feel more comfortable with B2 because of that discount. And you mentioned that they're building a mine up in the Arctic Circle, but that management team has done that before. They did that in Russia, if I remember right.
Well, no, absolutely. That was not B2, of course, but it was the same team. You're right. Right. Same management team. Yeah, no, good point. I should have mentioned that. No, you're absolutely right. And that's what I love. Now, look, there's no question that if the Mali government sends their troops into Fekola to seize the mine and kick out all the expats and maybe put a few of them in jail just for just for icing on the cake. There's no question that in the short term, the stock price will come down. There's no question about that. But I agree with, no, you raise a good point. Fundamentally, and that's what I love, fundamentally, if they lost it, just lost it, it's still a good company with upside.
Sure,
sure. The company in a way that Cobre Panama potentially could destroy First Quantum, because First Quantum has debt. That's the problem. Whereas B2, they do have debt to build Goose Bay, but the debt is offset. They don't have net debt.
Mali does concern me, though. In January of this year, the government nationalized the largest artisanal mine in the country. Now, an artisanal mine probably isn't giving the government the revenue that the Barrick mine or the B2 Gold mine is giving. So it makes more sense that that would be the first one they would nationalize. But also something not directly related to mining, on April 10th, the Malian government banned political parties and groups. And then the following day, on April 11th, the government banned media from reporting on political matters. So I don't like the direction that's going. And so there's definitely some concerns there for me.
Absolutely. And as you know, also, they have Russian troops in the country. The Wagner group that was, pretty vicious in Ukraine, a sort of unofficial arm of the Russian government. Well, they were in Mali and basically, just in cahoots with the government. So yeah, no, it's not a good place, and it's not getting better.
We're going to get right back to the interview, but I wanted to ask you to subscribe to the channel if you would like to see more from Adrian Day, because this is part 1 of this interview, and in a day or two, part 2 is going to be released. So be sure to subscribe to the channel so you don't miss that part 2. And if you're interested in Adrian's services, he offers a money management service and the Global Analyst newsletter. If either one of those sounds appealing to you, go to adrianday.com to learn more.
And you also mentioned that you really like Orogen. I love how careful they are with their spending. They're super careful with their G&A, in addition to being a cash flowing company that's still a small company. Do you have any idea of how much they could sell their silicone royalty for? I know it's growing like crazy, and it has grown a lot in the last 12 or 24 months.
Yeah, no, that's a good question. I'm not as sort of optimistic or, as maybe some people. I think it's going to continue to grow. But of course, with all these things, there's a sort of optimal time to try to sell something. And right now, you've got 13.2 million ounces. It has grown dramatically. Everybody assumes it's going to continue to grow. So to me, this is the optimal time to do it. When the blue sky is still there, you certainly want to sell it before they start doing a PEA and putting, engineering around it and so on. So I think right now, I think this will be a very, very, I'm just going through my thinking on this. This will be a very, very attractive asset for any of the major gold royalty companies, because first of all, it's a royalty, which is obviously better than a stream in terms of cash flow. It's a royalty, and also it's got Anglo Gold, which is, a major mining company, and it's in Nevada. So this will be an asset that all of them would want. So I think there'll be a bidding war, is what I'm saying. And as we know, in these bidding wars, sometimes things get grossly overpriced or arguably overpriced. I mean, we can think of examples from a couple of years ago where, let's say Royal Gold would buy Great Bear, and then Royal Gold bought the second Cortez royalty. And I'm reliably informed that on the Cortez, they were bidding at least 25% more than the second highest bidder, who already was 20% above everyone else. So in a bidding war, in an auction situation, you can get some crazy prices. Having said all that, Orogen right now is trading a little bit up. So I was looking at it on a price per share basis, if you'll excuse me doing that. I was thinking they could probably get $1.10, $1.15 for silicon, but that's on the assumption that everything else, the cash, the Ermitaño royalty, and then all of the other exploration they have is spun out. So that will put a value, 17 million plus. Ermitaño is probably worth 35 to 40 million US by my calculation, and then everything else maybe 5 million. The 18 and a half is Canadian, so let's say 15 there, 40, you're talking 55 to 60 million extra on top of whatever someone buys Silicon Orogen for. So I think that would be, we wouldn't get a huge premium, but when you consider everything that's spun out, they'd buy the company and spin everything else out for tax reasons. When you consider the value of everything that would be spun out, I think it'd be a very attractive offer. And the other thing to remember about this, this is not a 10 for 1 or anything like that, but the downside is as low as you could possibly have in the junior space.
Sure, and it's all about the risk reward, right?
Yeah.
I wanted to ask you about Equinox's purchase of Orion's 40% of the Greenstone mine. When I first saw that number, I was a little shocked at that price tag, $995 million. I was like, wow, they're paying almost $1 billion for 40% of that mine. And Orion's portion, if I remember right, has Sandstorm Stream attached to that, whereas Equinox's portion does not. I did some quick back of the napkin math here, and Equinox is guiding $890 per ounce AISC after reaching commercial production on their 60% portion. And then Sandstorm Stream on Orion's adds about $110 per ounce to that. So that'd be about $1,000 per ounce. That would put the annual cash from operations for that 160,000 ounces for that 40% at $212 million, which is a payback period of 4.69 years. And then you have a 16-year mine life to start. So although that number looked pretty big when I first glanced at it, doing some quick math, I'm actually thinking that it looks like a pretty good purchase price, especially considering the upside there.
Sure. Yeah, no, I agree. I'm not sure about I'll just take your word on the Sandstorm royalty, but it covers the Orion part, not the other part. Sorry. So I'm just stream rather. Because again, that could be, streams are done with companies, not with mines. I'm just saying I don't know. Yeah, when I first saw it, I thought, boy, that's expensive. But yeah, the more I think about it, I think not. And I think Equinox is right to try to buy it now before we've got a year's worth of production, and maybe the gold price is up, but a year's worth of production, which shows everybody, wow, this really is a good mine. We knew it was, but it really is. I think it clearly makes sense for Equinox to want to buy the whole thing. So on reflection, it's not quite as expensive as it first appears. You know, they're raising money, as you know, they're raising money at a reasonably good price, given where their stock price has been for the last 6 months. So, you know, the dilution is not as bad as, let's say, it could be. Another thing I don't like, to be honest, is a lot of this is 30% of it is in Equinox shares. I think it's 700 and something they get in cash, and the rest is in Equinox shares, maybe 20% in Equinox shares. You know, Equinox is not a company I'm completely on top of, as you can tell. But Orion, I mean, there's obviously going to be some lockups in those shares, but Orion is not in the business of holding shares in other people's companies for the long term. So they will be an opportunistic seller. So that is a bit of an overhang on the market.
Sure. And the market clearly didn't like it. It was down 8 or 9% today, if I remember right, or if I saw. But at the same time, that purchase is improving the political risk profile of Equinox. It just got it to about a 1 million ounce producer, because in 2024, Equinox's other mines are set to produce 590,000 ounces at the midpoint of guidance. And then after Greenstone is in full production, that's another 400,000 ounces. That's 990,000 ounces, which basically gets them to that 1 million ounce mark.
Almost to the million, aren't they? Yeah.
And also it improves their cost profile a lot.
No, I'll make 2 comments if I may. I'm not sure I completely agree with you on the first part about the stock price coming down. You know, when you look at Equinox, yesterday was what, 550, I think. Let me just pull it up so we can get, since it'll only take me a second, we may as well. So yesterday it closed at 570, sorry, yeah. So it closed at 572, and the offering is a 530, and it's now a 524. So it's not unusual when a company does an overnight offering, right? It's not unusual for the stock price to go right down to where that price is. And it's also, I would say, it's normal for them to go down to where the stock price is, and it's not unusual for them to go a little bit under. So to go only 6 cents under, I'm not surprised at that at all, frankly. Especially if when you look at Equinox, you know, for the last sort of, you know, month. I'm just putting it up, sorry, so we have the exact numbers. You know, you go back 1 month from today, and you're basically at the same price we were a month ago. So I don't think this is extreme, to be honest. I think your second point is very valid, though, because, you know, they've got the Brazil mines, they've got the California mines, moderately small, both of them. And then they've got the Los Filos, which is in Guerrero State, as you know, and they've had all the problems there. And they have to redo the mine plan, which essentially means laying off a lot of workers. So, you know, there's a question mark over that. They want the workers to, all of the villages, all of the groups, they want to sign on to the new mining plan, because there's no point in, you know, having a new plan and then, you know, having continued blockades and so on. So this now, having 100% of Greenstone, not only is Greenstone a great mine in a great jurisdiction, which it is, but it also gives them a little bit of whatever you want to use, leverage in negotiations, because now they can say, look, we've got another mine. We don't actually need you. We only need you if you cooperate.
Sure. And in fairness, their all-in sustaining costs ex Greenstone are atrocious. They're well north of $1,800 an ounce, but
Sure.
With owning 100% of Greenstone, that brings it down closer to $1,450, which is much more respectable.
Yeah, it's not exactly low, but it's much better. Yeah, no, you're absolutely right. You've hit the nail on the head. For the company, it really changes their dynamic and their profile. And it allows them flexibility. It allows them flexibility with Los Feliz and negotiations, but it also allows them flexibility, with California, if there's permitting issues or, all sorts of things.
Sure.
They don't have to be in such urgency to get these other things up and running.
Yeah, and they do have a lot of debt. They had something like 900 million in debt before this, and they just add another 500 million. And most of that is around 9% interest rate. So that is a significant interest payment. However, after Greenstone is in full production, based on my numbers, they should have a cash from operations around $860 million per year at today's gold price. So I don't see that being a problem.
Well, I hope they're going to make it clear to the market that they intend cutting debt, with the cash flow, cutting debt aggressively with the cash flow. Because you're absolutely right. And that last raise they did back in September was something that the market was not expecting, because they had told the market they had all the money they needed to finish building Greenstone. And in September they came out and did that convertible, right? It was a convertible back in September, which really shocked the market, and the stock crashed at that point. Or I don't think crashed is an exaggeration, but went down a lot at that point because people were not expecting that. So I think that's an important thing for them to get the debt under control. But I think they will. Now Greenstone's up and running, as you say, they're almost at 1 million. So they don't need to go out and buy anything or build it. They don't need to go out and buy anything else at this point.